Okay, good evening, everyone. I was just setting up some things I needed to set up. So we are set. Can you all hear me? Please confirm that you
I can hear you.
can hear me. Thank you. All right, so we are going to be starting with chapter one today. So business environment has just five chapters. Business environment has just five chapters. So we're doing chapter one today. Okay. Business process and environment. Business process and environment. Between business process and environment. Hold on. Okay, can you still see my screen? All right, thank you. So chapter one, business processes and environment. So this chapter basically talks about the business, what the business is, the structure of the business, talks about characteristics of the business, purpose of the business, why did the business come to be. Then it also talks about um, the business organization, talks about different types of businesses from sole proprietorship to partnership, and then the different types of partnership too. All right, business functions, economic activities, and all of that. So we'll just start and then see where class takes us. Okay. So now we're going to define a business. I'm sure that we all know the definition of a business. If anybody should ask us what a business is, we would be able to say something. Yes. So, but in your part, a business is defined as any human activity directed towards producing or acquiring wealth through buying and selling of goods or provision of service. Now, a business, for a business to be a business, it means that you want to make profit. It means that you set up that business with the intention of making profit. You set up the business with the intention of getting income, okay, of acquiring wealth. You wanted to build something that will give you money. Let me mention money, okay? So grow, you're going to acquire wealth and all of that. So that's what a business is. So any human activity now that is done not with the intention of acquiring wealth, you don't want to acquire wealth, you don't want to make profit, is not a business. Business must involve the acquisition of wealth. A business must involve return on your investments. Okay, you invest, you start up the business, and then what you're expecting is returns on your investment. Nobody puts money into a business, and then expects that the money should just go away. Everybody expects return on investment. So that is what a business is. Through buying and selling of goods or provision of services. So buying and selling of goods, products, or you're rendering services and you're being paid for it. Does the term business means continuous production and distribution of goods and services carried out to earn profit under uncertain or unpredictable market conditions. So, irrespective of what the market conditions are, you've already um, gone into the video that because you want to profit. Now we are going to look at structure of business. Okay? Structure of business. There are several structures here of business. Now, structure means what a business is made up of. Okay, what are the things that make up a business? What can you attribute to a business? You call something a business. What can you attribute to it? So that is what structure means. So when you say structure of something, it means the things that can be attributed to that thing, the things that make that thing what it is. When you talk about structure, structure means the thing, something that makes another thing what it is. So many things make a business what it is. And that is why this subhead is structure of the business. These are the things that make up the business. These are the things that make the business what it is. Now, the first one that we have is purpose. Okay. Every business begins with a clear purpose, whether it's selling products, offering services, or solving market problems. So you don't just throw your money into anything. Okay. You don't just throw your money into anything. You think about it, okay? You the right purpose, okay, and then you now invest. So the process does not start with investing. You need to know what you're investing in. You need to know whether it's services you want to offer or whether it's products you want to sell. Now, the products too, you need to know what type of products you want to sell. You need to know what type of service you want to render. You need to know what market problem you're solving by this your service that you've chosen to render or by this product that you have chosen to sell. If you want to sell shoes, there are so many people selling shoes. There are so many people who sell shoes. So you need to, for your own business to be unique, is that you have discovered a loophole, or maybe you just discovered something. Maybe the prices of shoes, or the way other people sell shoes, is too expensive. Can you hear me now? I'm sorry, network took me out. So I'm going to share my screen
Yes.
again. Then we'll continue.
Can someone just reach out to her, please?
Can you see my screen now?
Okay. All right.
Okay, so like I was saying, please can you react if you can hear me and see my screen? Okay, thank you. So as I was saying, you need to go into a business with a purpose in mind, whatever your purpose is. Hopefully your purpose is positive, a positive purpose, yes. So you need to go into a business with a purpose in mind. And the best way to also approach a business is that you've seen a loophole in the market or you've seen a problem in the market and then you want to solve it. Okay. So that way it's easier for you to have a niche for yourself. Okay, you're not just doing the same thing that everybody is doing, just posting, I sell shoes or I offer cleaning services. You can have a niche for yourself when you have discovered a problem in the market and then you approach your audience with that problem and the ways you intend to solve that problem. So the next one we have is activities. So there are daily operations that help fulfill the business's purpose, such as production, sourcing, marketing, and sales. So it depends on what your business is about. It depends on what you're doing in your business, the product you're selling or the service you're offering. So that is what will determine the activity that goes on in your business. So for a manufacturing business, you know that production must happen. Okay, sourcing raw materials must happen. Marketing and sales is a constant for every business. Okay, so but apart from marketing and sales, there are some businesses that don't require production, maybe from scratch. There are some businesses that they get the raw materials from somewhere else and then they just refine it a bit to get the finished goods. There are some businesses too that from the scratch, they are the ones who, even the raw materials, they are the ones that are in charge of producing it. Now, let's take a manufacturing company that manufactures sugar, for example. There are some manufacturing companies that
Ife,
manufacture. Please, can you mute yourself? So there are some manufacturing companies that manufacture sugar that they are not in charge of planting the sugar cane. Okay, they don't go into farming of any kind. Their own is that they just import the sugar cane, they import the materials already. So what they do is to refine. What they do is just to refine what they've imported and then you get sugar and then they give sugar to the market. But then there are some companies that produce that same sugar that they start from the scratch of even planting the sugar cane. Okay, so they are the ones who plant their sugar cane before they now get to refining. So the activities that occur in your business is unique to what you do. So if the activities is unique to what you do, the service you render or the products that you're dealing with, that you're selling. So it is unique. Like I said, marketing and sales is is a constant for every business. Because I feel like every business should market their products, and of course, every business sells the product or service. Yes. So every other thing, production, sourcing, there are some business that don't source. Okay. So packaging, There are some business who produce their own packaging materials. There are some people who outsource the packaging materials, so they get that from another company. So these activities are unique to what you do. They are unique, to the purpose of your business. So that is why the activities of the business are daily operations that help you to fulfill the purpose of your business. So you need to know the purpose of your business first before you can create activities that are going to help you to achieve that purpose. So the third structure we have is scale. Scale. Businesses vary in size, from small local shops to large multinational corporations. Scale affects reach, complexity, and operations. We know what scale is. We've heard of small and medium enterprises, SMEs. Then there are the large multinational corporations too. So I know that you know everybody starts from somewhere. You now grow. A small and medium enterprise today might be a large multinational corporation tomorrow. But for today, you are small and medium. Yes. So that is the structure of your business for today, as at now, till you become large. So as at now, the activities that are going to go on in your business are the activities of a small and medium enterprise. Okay, so scale affects your reach. Yes, it affects the people that you reach, the caliber of people you even reach. It affects the class of people you reach. It affects how many people you reach. Because if maybe you don't have so much money to pump into the business and then get so many products. Maybe if you're just getting small and then using the turnover to get more, you're just doing it like that. Definitely, you're going to sell out most of the time. And then people will come back, oh, I need this, and you'll be like, it's not available, try next week and all of that, so that you can have time to produce, or so that you can have time to source for the product. So it affects your reach, it affects your complexity, and it affects your operations and your activities. It affects how complex you are, how your complexity now is how difficult or simple your business is. Yes, how difficult or simple your business is. So stakeholders too. Stakeholders are anybody connected to your business is the stakeholder. As the owner, the owners.
Okay.
Mute. So stakeholders
Are you sure I should not give you extra water? Because it's pep.
okay. Please, Victoria, please mute yourself. So now your stakeholders are anybody that is connected with, from employees to customer suppliers, communities that your business operates in. They all have different interests and expectations of the business. Now, the community that do businesses, um, maybe let me say you're a large multinational corporation. The community that you do business in, you expect that maybe they do not have electricity you provide, or maybe the road was faulty, you can fix it. Maybe they didn't have water you can give to them. So these are stakeholders in your business, and they have different expectations. They have expectations. Your employees have expectations of collecting their salary at the end of the month. That is their expectation. That is their interest. Every employee comes to a business to work and earn salary. That's the truth. That is why they are there, to work and earn At the end of the month, we don't want to hear that you're telling us stories. We want that you're giving us money for the service that we have rendered to you. Give us our money in return. So every stakeholder has different interests and expectations. Now, your customers are expecting that you're going to give them quality, okay? That you're not going to supply fake to them. You're not going to give them fake products. You're not going to render a service that is below quality. Yes. So now your customers also have the expectation that your goods are going to be affordable, or your services are going to be affordable. So these are the different stakeholders that we have. Investors, we don't have investors here, but your investors too are stakeholders. The people coming to invest in your business, no matter how big or small your business is, they're investing. So they're expecting a return on their investments. Yes, depending on the agreement that they've had. Okay. They expect that the company doesn't run into unnecessary loss. You always every year declaring. So the investors also expect that your financial statement is is plain and made public, so that they can see what you have been doing throughout the year, what your activities have been financially. So it will help them to know if they would even want to continue with the investment, or they would want to pull their investment out. So we have economic contribution as a structure also. Businesses contribute to the economy through job creation, tax payments, trade, and innovation. So this is quite self-explanatory. Okay. So once your business has come into existence, you're already creating jobs. You're already creating jobs because people are going to work for you, and then you're going to pay them. Okay. Now, for tax payments, of course, you're going to pay tax. With the new tax laws that has been brought into existence, it holds all companies accountable. Yes, you need to be accountable. You need to pay tax. So in this way of tax payments, you're helping the government too. Now, for the job creation, you're helping the masses. You're helping the masses. Innovation too, you're helping the masses. Because, like I said, if you're coming that you've seen a problem, you want to solve the problem, you're being innovative about it. What did not exist before will now exist. Something that did not exist before will now be brought into existence. And that is what innovation is about. Whether it has to do with a good, a product, or a service. Another structure is your risks and challenges. External factors like competition, regulations, and market trends pose risks, and businesses must manage to survive and grow. So, competition, you're not the only one dominating that particular industry or market. Regulations, government regulations, today they'll say do this one, tomorrow businesses are supposed to do that, and all of that. So you're supposed to cooperate. You're supposed to cooperate. When they say go like this, you go like that. Now, it can also pose risks to your business. Okay, your cooperation with all these regulations can also pose risks to your business if you don't manage them properly. All right, so you have to manage your risks and challenges properly, but they are also part of your business. You cannot dodge them. Yes, it's not something you can dodge. Now we have legal structure. Businesses operate under legal framework such as sole proprietorship, partnership, or corporations, which define their responsibilities and limitations. Okay, So that is self-explanatory. Now let's go to type of organizations. We have several types of organizations. We start from the service business. This is self-explanatory, so I'm not going to plug it. Okay. So a service type of business provides intangible products. Now you cannot physically touch this product. You cannot physically touch a service. A service is felt. You want a service rendered to you, you see that the service has been rendered to you, or you feel that the service has been rendered to you. So you cannot touch it. Okay? It's not tangible. It's not tangible. So we have so many types of services. Service type firms offer skilled labor expertise and other similar work in return for professional or talent fee. So we have several types of services, like we can see here: hotel and lodging, fitness, hospitals, schools, museums, banks. These services, they don't sell products, they don't sell goods. What they offer are services. Services. You can also call them intangible products. Okay, they are intangible products, of course. Now the B, we have merchandising business. Okay, this type of business involves buying products at wholesale price and selling the same at retail price. They are known as buy and sell or reseller businesses. They make profit by buying their goods at prices higher than their purchase costs. They make profit by selling their goods, at prices higher than their purchase cost. A merchandising business buys a product and sells it without changing its form. Examples include all distribution and retail stores, such as departments, grocery, hardware, clothes, etc., etc. Now, a merchandising business is not a manufacturing business. It's not a business that involves you producing the product. No, you do not produce those shoes. You do not produce the clothes. You just bought the clothes or the shoes or the bag at wholesale prices, and then you add your own markup to it that will enable you to make profits. Okay, so you buy 50 polos at 20,000 naira, maybe 50 of them, 20,000 naira. Then you can now resell them. You're now the retailer. Okay, you're now the retailer that can decide to cost each polo 5K, or maybe each one 3K, or maybe each one 10K. You're just going to add a markup so that you can make profits. It's a business, it's a business. Okay, so it doesn't involve you producing, it doesn't involve you manufacturing. No, you don't have any business to do with the producing or manufacturing of those items. Your own is to buy already produced, already manufactured goods, and then we sell them, add your markup to them, and then we sell them. So the C part here is manufacturing business. Now, the manufacturing business is not the merchandising business. They are different. They are different types of businesses. Okay. So now, a manufacturing business buys products with the intention of using them as raw materials to make new products. Okay. There is transformation of the product purchased. Remember that in merchandising product, you're not changing its form. You're not changing how that product is. You're not adding anything. The only thing you're adding is calculating your cost and then adding a markup that will enable you to make profit. That is the only thing you're adding. So, but a manufacturing business, you buy this product with the intention of transforming them, okay, into another product. You're buying sugar cane so that you can transform it into sugar. Okay, so you're not buying sugar cane to sell sugar cane as it is. You are buying it so that you can refine it. You can go through some processes still under your roof. You can go through some processes to make a new product, to make honey, to make sugar, to make whatever you want to make. Okay. So a manufacturing business combines raw materials, labor, and overhead costs in its production process. The goods produced are then sold to customers. Okay. So a manufacturing business, there are so many costs, of course, that you need to take into consideration in order to get your selling price. Okay. So now we've seen that there are three types of organizations. Okay. So it's important to note that um, in as much as we say a business is when you sell products, or render service, it's important to know that when you're talking about products, you can split them into two, merchandising and manufacturing. Okay. They both involve products. It's just that one means that you don't have to change the form of that product, while another you change the form of the product and turn it into a new product. You use the product to create a new product. The other one, you sell the product as it is. All right. So, but service is service anyhow. So let's look at objectives of business now. Objectives of business. We have economic objectives, and then we have social objectives of business. Economic objectives of business. Now, a business is an economic activity. I'm not going to say much here because we've already talked about this, about a business being an economic activity where you want to make profit and all of that. So a business is an economic activity, hence its purpose is to show positive economic results. Let us clearly understand the economic objectives of business. So these are the economic objectives of business. Sorry. Let me go down. Let me go back to, okay. So these are the economic objectives of business. Profit earning, definitely. So you're not going to buy something at 5 naira and then still sell it out at 5 naira. Even if it's 6 naira, you choose to sell it. You have made profit of 1 naira. So profit earning, market share / creation of customers. So market share, you can relate it to when I was talking about creating a niche for yourself, having a niche for yourself. You create your own, then you can create your own customers. Let's use bread as an example. Everybody's producing bread, but there are different types of bread. There are breads that you have sugar and butter in them. There are the ones that there is no sugar. Those ones are considered to be produced for diabetes patients. There are breads that are considered to be produced for diabetes patients. There are bread that they are known as wheat bread. They are produced with no sugar, no butter, no milk, no, all those things that can be sugary, all those things that are sugary, because they have a particular niche that they are producing for. So that person too has their own customers. So you cannot see maybe a young growing child, maybe the parents of a young growing child going to that supermarket or that business to purchase that wheat bread for her child or his child. Okay, so the same way too, you cannot see somebody who has that illness, diabetes, going to get bread that is full of sugar and then sardine, butter, and all of that, milk. Okay, because they know that it's not good for their health. So when you have your market share, it also comes with having customers that are unique to you, that are peculiar to you. You have your own customers. Okay, so this does not mean that maybe other people will not come to patronize you if it's not diabetes patient. No, but you have those ones first before others can now join. Now, innovation and utilization of resources. Okay, innovation and utilization of resources. I've explained innovation before. Increasing productivity. You want to be productive, and your productivity will affect not only you, it will spread to your employees, it will spread to the community in which you operate. So let's look at social objectives of business. According to Jason Hudson, the purpose of business is serving society, not just making money. Business is one of the pillars on which society stands. Therefore, it is a part of society. Now, let me stop here so I can explain something. There are some communities, there are some places that, if not because of one business or the other, maybe if not because somebody chose to come and do business there, if not because this large multinational corporation suddenly remembered our community to come and do business, maybe those communities will still not have water supply till today. Maybe they won't have good road network. Maybe they won't have electricity. So this is the social aspect of business that we are talking about. You're creating your business to make profit. You're creating your business to earn money. Okay? You're creating your business to, make money, to be innovative and all of those economic objectives. But then also, side by side comes the social objective of you creating that business. You're creating the business not just to make money, but to serve the society. Because your business came into that community, there is job creation. Because your business came into that community, the youth in that community now have what they are doing, now have a way of making money too for themselves. So it's not just you making money now, you have also reached out, to other people in that community. You've provided social amenities for them. So when we look at economic objectives of a business, please let's not forget the social objectives of the business too. They work hand in hand. You cannot leave social objectives of the business and focus on only economic. You won't even succeed because the community is going to give you problems. Okay, so you won't even succeed. You're not employing anybody from the community in which you operate. You're not creating anything. Maybe you've not built anything. You've not provided any social amenities. You won't be able to succeed. So to even succeed economically, you have to take into consideration to a very great amount the social objective of your business. Okay, you have to take into consideration the social objective of your business, for you to even succeed, for you to make that money that you so want to make. So now the necessary social objectives of a business are as follows: providing goods and services at reasonable prices, employment generation, like I said, fair remuneration to employees, yes, and community service. So these are all self-explanatory. So let's move on quickly to types of business entities. So we are going to dwell here for a bit. Okay. A business entity is a commercial organization that aims to make a profit from its operations. There are four main types of business entities. We have, excuse me, sole proprietorship, partnership, a business partnership, a company. Okay, so we are going to start with what a sole proprietorship is, features of a sole proprietorship, everything sole proprietorship. But I know that we have heard about a sole proprietor before. We know who a sole proprietor is. We know what a sole proprietorship business is. Okay, so a sole proprietorship business Using layman's terms, and like we were even taught in secondary school, it's a one-man business. Okay, it's a one-man business. Before we start speaking English and then go into the Greek definitions, know that a sole proprietor is a man, is a single person's business. Okay, so they are usually small operations, but the owner might employ a number of employees who work for the business to earn a wage, but do not have any share in the ownership of the business. They don't have any share. It is my business. I am the one who has full rights to determine how much I will pay you. I'm the one who has full rights to the operations of this business. If I say we are not going to produce today, then we are not going to produce. If I say let's produce 5 times a day, then that is how it should be. So I'm the one who calls all the shots. The sole proprietorship. The sole proprietor is the one who calls all the shots. Yes, he might get opinions from others, but at the end of the day, he must approve. At the end of the day, everything must go through him. And if he does not give consent, then it's not going to be done. So this is not the case of having board of directors and then the board makes decisions and then majority carries the vote. No. So a sole proprietor is the person, is the sole owner of the business. He calls the shots in the business. Other people just work for him, to earn money, to earn their own salary, but they don't have any share of the business. Yes. The business of a sole proprietor is owned by one person and usually managed by that person. And who sets up business. So any individual who sets up a business, you create your own business by yourself. You're a sole proprietor. You're a sole proprietor. So now we have features of a sole proprietorship. Features of a sole proprietorship. Unlimited liability, we have sole decision making, sole risk taking, sole management and control, minimum government regulation, no entity concepts. Okay, death of owner might discontinue the business. So please take note of this point. When it's time to ask questions, I just want us to move forward. Anyone you don't understand, ask me and I'm going to explain them. So we look at the advantages of sole proprietorship now. Advantages of sole proprietorship. The first one we have is easy formation. Easy formation. Yes, it's very easy. So you can just wake up one day, you have a business idea, and then you go into it, and then go from there. So you don't need to contact anybody. You don't need to put any heads together. You can just be your own head, your idea, and then you start your business like that, irrespective of what the business is, irrespective of the form or nature that the business might take. Okay, so it's also inexpensive management. Yes, better control because all the decisions you're making all the decisions, so you can better control your decisions. You're the one who made the decision, so you can control your decisions. Okay, everything is in your hand. Now, pride of ownership. You own the business, so there's that pride that comes with it. Easy, easy process of establishment and winding up. Like I said earlier, you have a business idea. You stand up, jump into it, and you start the business. You have the capital, you have your investment. You stand up, put the money there, purchase the product to sell. You stand up, purchase the product to turn into another product, you stand up, start offering the service you want to offer. So there's an easy process of establishment there. Okay. So you're not consulting anybody, you're not putting people together, you're establishing the business on your own. Then also, when you want to wind up, maybe the business is going down, it's not making profits, it's not going in any direction that you intend that it to be, and then you want to call like you want to wind up the business. You can also decide one day, call your employees, explain to them that the business is not heading in the direction that you want it to head, and you'd like to close the business down. That's even for people who call their employees to even tell them. There are some people I heard recently of a school that sold the school, the proprietress sold the school, the owner of the school sold the school without informing the teachers. The next term, the next session, sorry, as the session began, the teachers wore their clothes with their bag and everything and went to work as usual. And then only to meet at the gate that this property now belongs to so and so. The school has been sold without the owner of the school even informing them. So that is to show you how a sole proprietors do things. That's to show you how they operate. They can even just wind up the business, sell the property and sell without informing you that is working for them. So that is it. The sole proprietor just call the shop anyhow he wants to call them or she wants to call them. So there's high degree of flexibility too. Yes, flexibility in decision making, flexibility in control. You can decide to do something today. Tomorrow you see that you can't do it anymore. You change, you say you cannot do it. So there is that flexibility. There's that flexibility. The secrecy of business operation can be reasonably maintained. Yes. All your struggles, you know all your struggles, you know all the successes and your wins. It is your choice if you want to share or not. So the secrecy of your business operation can be maintained because you're the one who calls most of the shots. Okay. Faster decision making process, yes. Benefits of small scale operations, yes. So these advantages of sole proprietorship. Disadvantages of sole proprietorship. The first one we have is limitation in size. Most sole proprietorship businesses are small. They are small and medium scale enterprises. They are small. So there's that limitation too that they have. So earlier on, I was talking about what when we're talking about scale as a structure of the business. I talked about how because your business is small, it can hinder your reach. It can hinder the people that you reach. It can hinder you, it can draw you back, okay, based on your reach. It can draw you back. You might not be able to reach so many people. So many people will not know of you because maybe that your product is always selling out. You just don't have enough to meet the needs of the market. So there's that limitation too. And most sole proprietorship fall into that small scale, small size. So there's that limitation. Then we have slow adoption to new technologies. Yes, a sole proprietor most of the time is set in his ways. If he has always done bookkeeping with his pen, it might happen. Whether there are 100 apps now to do that same bookkeeping with, he's going to be set in his ways of, most of them are set in their ways of pen and paper. You know, still pen and paper, just still write things down. Some of them even have um, laptops for their employees, but just still have a hard copy that when you put it in the laptop, still write it in the book. So that is the slow adoption to new technology that we're talking about. This is just one way. Limited ability to attract and retain capable employees, because capable employees are expensive. Yes, capable employees are expensive. So if you need expensive, if you need capable, you need to be ready to pay for capable. Yeah. So most sole proprietorship um don't have that maybe large profits to be able to pay for these capable employees. Okay. So that limits them too. So they are limited to people that they can pay, which most of the time they have to teach them the job. Most of the time they are struggling with them in one area or the other. Maybe they cannot speak well, or maybe they come to work late or something. Yeah, so that is also a disadvantage. Another disadvantage is limitation of management skills, unlimited liabilities, lack of continuity on the death of the owner. These are all self-explanatory. So let's move on to partnership now. Let's move on to partnership. So we know what a partnership is. Two or more individuals come together to start up a business. So a partnership is a shared ownership of a business. When you hear partnership, it involves two or more individuals. So it's not just you now. When you say just you, you're talking about sole proprietorship. But when it's a partnership, it involves um, two or more individuals. Now each partner contributes some funds or capital to set up the business, irrespective of the percentage, that you're contributing, you are contributing. So each partner contributes. Okay, I can decide that I want to contribute 20%. The other person can decide that he wants to contribute the 80%. Or maybe we are three, we can do 20, 30, 50. Anyhow, but we are contributing a quota to the establishment of that business. Like a sole trader, a partnership may have employees who work for the business but have no share in the ownership. So the ownership now remains with these two people, or these three people, or these four people that have come together to establish the business. Okay, so that is one similarity that it has with a sole proprietorship. The sole proprietorship is just one man or one woman, yes, but the ownership um, is retained with just that one person. For a partnership too, the ownership is retained for just the partners, just the people that contributed money to start this business. Let me put it that way. So partners may have equal ownership rights in the business or may own different portions of the business. The legal basis for this arrangement is contractual, and it specifies the duties and honor and rights of the partners. Okay, so you don't just start up a partnership business with word of mouth. Okay, it needs to be something that is put into writing. Yes, something that is put into writing. No, I brought 10,000 naira out of the 100,000 naira. So in addition to that, this is what we're doing. Or when profit is made, this is how we're going to be shared. So I don't expect that you that brought invested, maybe that the only investment you've made in the business, that's your initial 20K that you brought. Then when the profit comes massively, then you now want to take the same portion as everyone else. So a partnership business has specific duties and rights for each partner. You're entitled to this, you're entitled to this, you're entitled to this. Okay. So my own entitlement might not be the same. Me that got 20K, I might not be entitled to the same amount of money or entitled to the same amount or that the person that brought 50K is entitled to. The practice of law, finance, accountancy, and other similar professions abound with partnership form of ownership. Okay. Now we have features of a partnership. Features of a partnership. We have ownership, liability, formation, motive, legal status, disclosures, partnership deed, governance. So these are all features of it. These are the things that make up a partnership. Ownership, two or more people. Liability, the liabilities of partners are usually unlimited. Okay, so formation motive too. Why did we all come to form this business? Legal status. Is it or is it not a legal entity? Are we doing things by the law, by the books, or just word of mouth, or just I know you, you know me, we are friends, But I'd always advise legal status, even if you're friends. The legal status does not turn into enemies, it just sets things straight. So, we have disclosures. There's no requirements for provision of information to the public. Other disclosures may follow. Partnership deed is guided. A partnership is guided by a document called the partnership deed. So this is what everything that the partnership entails is in this partnership deed. Okay, governance. It has no board of directors, just like the sole proprietorship. The partnership has no board of directors. Sources of capital, contributions from the partners, not an external person, not any other person. Contributions from the partners, irrespective of how much they are contributing. So we have types of partnership. We have limited partnership first. Now, a limited partnership is a business structure involving two types of partners: general partners and limited partners. Now, the general partners, they manage the business and they are personally liable for its debt. The limited partners invest in the business but do not participate in the management of the business. Their liability is limited to their investments. Okay, their liability is limited to their investments. So, general partners now are the people that, even in a partnership business, there are some partners that are dormant. There are some partners that are dormant partners. They don't involve themselves with the day-to-day running of the business. Their own is, it is money I can invest. It doesn't stop them from being partners. They are still partners. But the only thing that they bring into this partnership is the funds. Is the funds. Okay, so that makes them limited partners. Now, general partners are the people who do the work. They are the people who do the work. They manage the business. They are responsible for the day-to-day running of this business. Okay, so that also makes them liable for the debts. Any debts that the business should incur. The general partners are the ones that are liable for it because they're the ones in charge of running the business. So they'll be held liable for the debts that the business incurs. Okay, so we'll look at key features of limited partnerships. Key features of limited partnerships. Ownership up to 20 persons. Up to 20 persons. Remember that we've talked about partnership. So we are looking at different types of partnerships now. Different types of partnerships, but they come in different forms. Now, ownership up to 20 persons. Okay. Ownership up to 20 persons. You know, in these 20 persons now, there are some people that it's just money they brought in. Mhm. There are some people that they are the ones that do the work. They are responsible for doing the work, for doing the day-to-day running. They are responsible for hiring staff. They are responsible for the payment of those staff. They are the ones that will be held liable if we incur loss. If the company is run to the ground, you hold the general partners accountable, like I just explained. Okay. Now the features, ownership, limited partners. We explained limited partners already. Now, limited partners, they are not involved in the day-to-day running. Their own is, how much do you want? I can give you this. I can invest this amount. Okay? So they are passive or silent investors. They are dormant partners. They are passive or silent investors. They cannot be involved in day-to-day operations, like I said earlier. They may inspect records and have limited voting rights. Risk is limited to the amount they invested. They invested 1 million naira, their risk is limited to that amount. Okay, so at the end of the day, maybe the business runs down into the ground or something happens. That 1 million naira that they invested is what they will lose. The 1 million naira that they invested is what they will not have return on. So you cannot invest 1 million naira and then you'll be expecting the returns that come with the investment of 2 million naira. Okay, so the risk is limited to the amount that they invest. Another feature that we have is taxation. The partnership itself is not taxed. The partnership itself is not taxed. Each partner pays tax on their share of the income. So the partnership, the 1 million naira as a whole is not taxed. It is each partner that pays tax on their own share. Okay, the business partnership is not going to pay tax on the 1 million naira that it made. It is each partner that is going to pay tax on either the 200,000 naira one person made, or the 100,000 naira one person made, or the 500,000 naira the other person made, or the 400,000 naira the other person made. So you cannot tax the lump sum. Okay. Limited partnerships are commonly used by professional firms, such as those in law, real estate, accounting, and finance. Another type of partnership we are going to be looking at now is limited liability partnership. Limited liability partnership. Note that this one has liability, the other one did not. The other one is just limited partnership. This one is limited liability partnership. A limited liability partnership is a new business structure introduced under Part 3 of Farmer 2020. It's combined with flexibility of a partnership with the legal and financial protections of a company. Okay? So you can say that a limited liability partnership is in between. Okay, it's not totally a company. It's not totally a company that you say has board of directors. Okay, and then it's also not totally a partnership. It's also not totally a partnership, but that just involves two or more people. So it's an in-between. It's an in-between kind of system. Now let's look at the features. Well, as we look at the features, we are going to better understand what a limited liability partnership is, or what it means. Separate legal entity. Separate is distinct from its partners. So the limited liability partnership means that the company that is formed, the business, let me not use company, A business that is formed is separate from its partners. Okay? Limited liability. Partners are only liable up to their agreed contributions. Yes, so that makes it so like I said, the limited liability partnership is an in-between. As we can see, the first feature takes the form um, of a company. Okay. Now, a company too is distinct from the person that initially brought up the idea, because the company now has a structure, has board of directors, that make decisions, not necessarily the initial person that said we should be doing sugar. So now that first feature that we've seen now takes the form of a company. The second one takes the form of a partnership, like we just mentioned when we looked at the limited partnership. So partners are only liable up to their agreed contributions. The third one, perpetual succession. Limited liability partnership continues despite changes in partners, just like a company. Anybody can leave before you introduce new people to the board. So flexibility offers operational freedom like a partnership. So it's just a mixture. A limited liability partnership, a mixture of a partnership, in its rawest form, and then a company. So it's a mixture. It's a mixture. You take some here, you take some here, and then you make up the limited liability partnership. Okay? Designated partners, minimum of 2 with at least 1 resident in Nigeria. No maximum partner limit. Unlimited number of partners allowed. Naming requirements must end with limited liability partnership or LLC. Just like limited liability company. Okay? So like I said, it's in between. So it takes from here, takes from here. Okay. Registration is done through the Corporate Affairs Commission, CAC. Tax treatment. Limited liability partnerships are tax partnerships, not companies. The tax are partnerships, not companies, which means that partners are taxed personally on their own share of profit, like I mentioned before. Okay, it's not that the whole profit, the profit as a whole is not taxed. It's just your own share. Your own share will be taxed personally, and you'll be liable to pay your own share. Okay, you'll be liable to pay tax on your own share of profit. Profits are not taxed at the entity level. I've explained all of that. So the third type of partnership we have is a limited liability company. So this is the last one we are going to take before we end for today, so that I can also make room for questions. Okay. A limited liability company is a hybrid business structure that combines the limited liability of a corporation with the tax flexibility of a partnership. It is formed by individuals pooling capital to run a business that is legally separate from its owners. So in this case, the business is separate from its owners. Okay, it's separate from its owners. The only similarity here is that is the flexibility of the tax, where each person pays tax on their own share of profit. So we are going to look at the pictures now. Separate legal entity from its members. All right, limited liability. Members are only liable up to their just like a partnership. Operational flexibility with corporate benefits. Operational flexibility with corporate benefits. Owners are called members, not shareholders. Requires formal registration and share structure. Okay. Types of limited liability companies. Private limited liability companies. Membership 2 to 50 persons cannot offer shares to the public, known as a closed company, a private limited liability company, because it's private. Okay, you cannot offer shares to the public. Your financial statements too are not made known to the public. For investors to choose whether they want to invest in your company or not. Now we have public limited liability company. Minimum of 7 members. Okay, can invite the public to buy shares. So public limited liability company, PLC, as we all know it. So you know that maybe a business was owned by one man or maybe a group of people, but they've been private. They didn't used to invite the public to buy their things. They used to sell shares. Okay. But once they become a PLC, it means that their financial statements are taken more seriously, because they make this financial statement, the audited financial statement, known to the public. They make it open to the public. Okay, so they also sell shares. All right. The last subhead we are going to take is this subhead: differences between public and private limited companies. So this is the last subhead we are going to take, and then we'll close the class for today's questions. Membership. Okay. Public. Maximum members unlimited. Private. Maximum number of members is 200. So there are different. The membership consists of it takes different forms. Trading of shares. For a public limited company, the shares are listed on the stock market and they can sell the shares publicly. For a private limited company, the shares are not listed to the general public and only sell the shares to a maximum of 50 people. Now, these differences, we've already discussed them in their features. Okay, so you can just take the features, the different features, okay, and then create differences, your own differences. So it might not necessarily be this. It can be other things. Just looking at the features, studying the features of this one, studying the features of public, studying the features of private, and then you can say something when you are asked to maybe mention differences between the two. So directors, the public limited liability limited companies have a minimum of 3 directors. For private, the minimum directors is 2. Statutory meetings, public statutory meetings are mandatory. Private statutory meetings are not mandatory. So for public limited companies, you hear of AGM, your annual general meeting, which for a private limited company, they don't do that. Okay, so these are the differences. These are the differences between the public and private limited companies. So that is all we have for today. We are going to continue next week Friday. We are still going to continue with chapter 1. The long chapter, very long chapter. Chapter 1 next week Friday. So, do you have any questions? Do you have any contributions? Do you have anything you want to say? The floor is open. So I want to hear from you. Any contributions? Okay, I got the GC. Okay, you can speak.
Okay, all right. Good evening, Madam Angela.
Good evening.
Good evening, class. Can you hear me?
I can hear you.
Okay, all right. Okay, thank you. I was actually going to ask this question because I remember when I was reading the materials too, I felt that there's a particular mistake in that material. But you mentioned that the way it's inside the material again this evening. So I just want to clarify if I'm assuming that there's a mistake in that material, or maybe you need to be able to clarify it to me better. All right. When you were talking about the features of private limited liability company now, you made us understand that the members can be minimum of 2, maximum of 50. But when you were doing comparison between public limited liability company and private liability company, you mentioned that for private limited liability company that the members can be up to 200. This seems confusing. Please, can you shed more light on this? Can you clarify on this on that particular feature as regards the member of limited liability company? Thank you.
Is it network? Can someone hear me?
I can hear you loud and clear.
Yes,
Yes,
I
we
can
can
hear
hear
you.
you now, but I think the network was bad.
Okay. It seems our teacher is busy, but let me answer that question. So,
Of
private
private
limited liability.
membership.
Okay, she's back.
Sorry,
Who's
you're
there?
breaking. We didn't hear you.
I think she's having network
Okay,
issues.
hello, good
Okay,
evening. My name is Shola Daniels.
okay.
Okay, regarding drawing, drawing is a situation where the the business owner decided to withdraw for his personal use. That's my own definition of drawing. So when it comes to an account, when you are preparing your account, you're going to debit um drawing is an increase in liability. So you're going to debit drawing. That is um my answer here. All right. Mm. So you debit drawing. Yes. Okay.
Okay, the brother that asked the question the other time about limited liability.
No,
Do you
I
have the
said
answer now?
you debit drawing because it's an
No, I'm
increase
talking about
in
the limited liability,
assets.
the minimum numbers and maximum numbers. Can I give the answer now?
Please go ahead. Please go ahead.
All right. So they are talking about the private and the public limited liability. So the minimum member they can have in private is 2, and the maximum is 200. While in public, the minimum they can have as member is 3, while the maximum can be any number. So that's what they are saying. So in when they were explaining, they talked about the minimum. But when they were differentiating, they really talked about the maximum. So part of the difference we say is The minimum for public is 3, and minimum for private is 2. And another difference is that the maximum for private is 200, while the maximum for public is unlimited. Do you understand now?
Yes, I got that. But you know, when she was teaching, she kept on mentioning that maximum for limited liability is 50. So where is this 200 coming from again?
Is from private, for private.
Man, that's what I'm saying. I
200
said
is
she
the
was
maximum.
mentioning that the maximum is 50. So which is
Okay.
which? Is it 50 or 200?
Okay, is it 50 or 200? Okay.
Yes.
Let's wait for her if she's coming back, or maybe next week when she's going to take us again. We can clarify from that, or we can even Google it or something, so to confirm the real number.
Can you hear me? Hello?
Yes, we can hear you now.
Hello?
We can hear you now. We can hear you.
Okay.
Loud and clear, we can hear you.
All right. So a minimum, the private limited company has a minimum of 2 people and a maximum of 200 members. Okay. So the maximum can be up to 50 or up to 200. You can have a maximum of 50 to 200 members. So that's the explanation there. The minimum is 2 people, the maximum is 50 people, maximum 50 people to 200 people. So there's a
Hello, ma. Hello.
I can hear you.
So can it be right to now say it in summary that the minimum can be 2 and the maximum can be up to 200, so that it cannot be confusing saying 50 to 200? Why not just say the minimum can be 2 and the maximum can be up to 200? Full stop. That's what I'm thinking.
We can also say that.
Thank you.
You're welcome.
Thank you.
All right. Tolu, your hand is up. Okay. Okay, Ibrahim, your hand was up before.
Okay, good afternoon, Madam Angela. Good afternoon, fellow colleagues. Thank you for the lecture.
You're welcome.
Okay, sorry, good evening. Good evening. I'm very sorry. Okay, I just wanted to have more clarification on the LLP, the limited liability partnership. I need more clarification on it. Then my second question is, please, how can we get the material of the Apex professional you are using? Thank you.
Okay, you can get the material from Michelle Kabir. Yes, the list. I'm going to. I don't know.
Sorry, ma, you said from who, ma? From who?
Mr. Yusuf.
Okay, Mr. Yusuf. Okay, thank you, ma.
Yes, yes. So you can contact him. for the matter. I'm also going to drop the number on the group chat so that
The bread is still, man.
you
They
know
make
that.
a as of soft drink while you carry
So
take and put. You don't finish up. Huh?
okay, I should be sharing everything.
So I don't go passport man she French league. That's French league now. All right, good night.
Hello, guys.
But
She
please, can we
doesn't
get
network
clarification
issue again.
on what the first question, first person asked about the differences of the maximum members the private limited liability company can have? Because even me, I'm still confused a little bit because I saw one of my research where they said every private company that exceeds 50 members
50
must,
would have to change to
must be
public company.
converted to PLC
Yeah.
automatic.
That-
So even
I
me, because I also
I
noticed that
believe
that policy is for other countries.
Limited liability partnership. Then it's a business. The limited liability partnership combined with the company. So like I said, the limited liability partnership is like an in-between structure, like an in-between kind of structure between partnership. I said I'm going to start.
Can you hear me now?
Yes, yes, even though it's breaking.
Yes, my network is so bad. It's so bad. I don't know. It's so bad. So it just keeps taking me out of the call.
Please, ma'am, can the contact of Mr. Yusuf be shared on the platform so that we can reach him in order to
Yes,
get the material?
yes, I will. I'll
Okay,
send
thank you
from.
very much, ma'am.
You're welcome.
So I'm thinking, should we just call it a day? Because the way the network is just logging you in and out.
Yes, we can.
Thank
Thank
you
you
very
for
much, ma'am.
attending. Thank you for
Yes.
attending. All right, good night.
All right, thank you, Madam Angela, for the beautiful lecture.
You're welcome.